to what I think is going to be the best conversation at Render. Oh, thank you. So my name is Burks Soloman, and I'm super excited to be moderating this discussion about the art of the pivot. Raise your hand if you have pivoted, are thinking about pivoting, something in that area. Okay, a lot of you. So the folks that we have on stage have done some interesting pivots over the last few years and have helped entrepreneurs through pivots. And so we're gonna get into it. Just real brief background on me so you know who's talking to you. I am managing partner at Collab Capital. We're an early stage investment fund investing in Black entrepreneurs building innovation for tomorrow. And I am here with my esteemed panelists, and I will let them introduce themselves. So Kimberley, kick us off.
Hello, everyone. My name is Kimberley Bryant. I think I am probably best known as the founder of Black Girls Code. It's a nonprofit organization that teaches girls from marginalized communities about technology and helps them to break into the field as the next generation of innovators. I am now also the founder and CEO of Ascend Ventures, which is an organization that is really focusing on ways to address the racial wealth gap through entrepreneurship and ownership. We just started and launched our first initiative, which is called the Black Innovation Lab, which will be right up the road in my hometown of Memphis, Tennessee. So happy to be here and happy to be working in this ecosystem and taking it back to the South.
The South. Hi. Now I feel like I'm going to hold your shoulder. All right. Hi, I'm Sheena. I am the founder and CEO of Capway, a fintech company where the idea came from my experience of growing up in Mississippi, Terry, Mississippi to be exact. We started out focusing a lot on consumer banking or consumer fintech. We've made a pivot more to focus on B2B and infrastructure, which we'll talk about in this conversation. But yeah, same, happy to be here.
Rounded out, honored to be here. Thank you all for having me. Connor McKenna, I'm the portfolio director for Pronghorn. We're a new company, but we are a venture fund that invests in Black-owned spirit companies. We are on a mission to diversify the U.S. spirits landscape through access to capital, network, and know-how. Excited to talk a little bit more about it soon, and happy to be here.
All right, so I told you we had a phenomenal panel. Sheena, I'm going to start with you. So we've seen some major changes in the fintech space over the last year. We know that there have been banks to fail. There's been a lot of movement in the industry. You mentioned that you've been able to pivot. Talk about a little bit more about Capway, what you all do, and how you've been able to stay resilient and continue to provide value for your customers.
Yeah, so 2019 is when we first started executing on Capway. So once again, the original idea of Capway was building a digital bank for people who are more financially underserved, unbanked, underbanked, you know, whatever the case may be that you will fall into for whatever reason being financially underserved, paycheck, you know, so on and so forth. We started out doing what was called banking as a service, a BaaS model. It kind of like a SaaS, but it's for banking. The beauty of BaaS models is that you get to move very fast. You can have a debit card in 2 months, 3 months. The bad side of working with the BaaS is you're really just a marketing firm in between because you don't really own anything that you do from a banking perspective. So that is how we started out in 2019. Realized very quickly that we couldn't really grow because you're kind of stuck in a box with whoever is your BaaS provider. And we kind of stepped back in 2020 and decided that we were going to take a different route versus the BaaS route. Going to how that shifted to this pivot even today is when the pandemic hit, everybody went to digital banking. Even like my 65-year-old dad who would have never did any banking on his phone before, he kind of was forced into having to do something on his phone. And really the market got saturated with digital banks. Everybody wanted to become a digital bank when the pandemic hit. The negative side to that is not just about the market being saturated, but consumer fintech or consumer banking already has an extremely high customer acquisition cost. The CAC and banking is extremely high. So the market got saturated, it just made it 10 times higher. And so that was part of what we were already kind of working on in the start of a pivot. But banking itself has changed so much. One is going digital, two is very saturated, but three, because there's so much competition, you have to have a lot of capital in order to be able to compete because the customer acquisition cost is just so high.
And I'm going to stay with you for a little bit because I think what you're saying is super interesting and informative to folks that are looking at starting ventures and looking at what the competitive landscape looks like and thinking about what their cost of customer acquisition might be. So talk a little bit about how you have, one, raised capital to be able to continue through the different iterations of your business, and two, what you're focused on now and what you see as the future of Capway.
Yeah, well, we raised our pre-seed round on that thesis, doing a digital bank for unbanked and underbanked. When we raised our seed fresh out of YC, it was more of we're doing a digital bank, but we want to build more of an ecosystem in the world of fintech. Not really getting to the investing, this is about pivoting, but Jewel probably can also attest, when you pitch to investors an idea, even pre-seed seed, they're more so investing in the founder, not necessarily the idea, but they want to see the idea through. So mind you, every company pivots to some degree, and we've seen some of the best companies start at something. Twitch was something totally different than what it ended up being. But we had to go back to our investors and was like, hey, this is not really what's going to work. And so we went back and said, hey, we still can have that same reach, and we can maximize that reach by going more B2B, B2B2C, because we had built all of our technology in-house. So why would I do a customer acquisition cost so extremely high to get one person when I can go take my technology to a CDFI, a MDI, and I can now reach their 30,000 people by them using my technology. And in the end, we still make the exact same impact we started out with, which was giving better technology and opportunity to people who were underserved.
Great. I want to just highlight a couple things you mentioned because you said it really quickly and people may not understand the gravity of what you're saying. Number one, as a Black woman founder of a fintech that went through YC, raised a pre-seed, raised a seed round, is continuing to stay resilient when others are falling. I just want to give you your flowers for what you're doing because it's amazing.
And I will say the landscape has not really changed. Last week, I went to an event in San Francisco. Mercury threw an event, Mercury Burks, if anybody does like corporate banking. Mercury did an event called Raising Your Series A. It's an invite only for like 15 companies that they pick. Only Black female in the room. And this is 2023.
So we still got some work to do. We're working on it, but we got some work to do. But I think another important part of your story is that you are now understanding the focus on creating value for your customers and getting to a point where you are generating the revenue to sustain your business and not being overly reliant on raising that next round of funding. So Kimberley, I'm gonna come to you. So you recently transitioned out of Black Girls Code. You mentioned most folks, I'm sure you all have heard of the amazing work that Black Girls Code that you've done over the last decade plus. Talk about your new organization, what motivated you to found it, and particularly talk about the ownership piece and why that is so important coming out of your experience with Black Girls Code.
Yeah, I would be happy to dive into that. So without getting into the gory details, because you all got Google, you can Google it. You can see like a lot of the drama that has been sort of in the history. Unfortunately, a Black Girls Code starting back, it's almost 2 years now, but it started back at the end of 2021 when I was sort of like forced out of my nonprofit organization by my board. We started on this path, which we are still on, by the way, back and forth litigation and fighting for the name, fighting for the organization, and then I transitioned at the end of last year. And when I went through that really forced transition, I had to really kind of sit with first like the shock of it all and like having to build something from the ground up and being forced out of it and have to fight for the thing that I created. Like it really was a thing. And I don't want to minimize that because that is something I wouldn't, well, I might would wish it on my worst enemy, but but for anybody but that person, I probably would not wish that you would ever have to go through something like that in your life because it was really traumatizing. And like I still am still in that healing process to a certain extent. But one of the things that I did during that period was really start talking to a lot of founders, a lot of innovators, both in for-profit and nonprofit, and I found a lot of similarities. I found that I wasn't the only person that had gone through something like this. I probably was one of the few that was very public about it and really continued to talk through it, but it was happening very often. And I found that there was a problem. There's certainly a problem in boards, both for-profit and nonprofit. But the core issue that I found was this issue around ownership. Like if we really want to move the needle, when I was building Black Girls Code, I thought that was about getting girls or people that look like us in this room access to technology skills, but that is not enough. You know, if you look at what has happened with these massive layoffs all across the tech industry over the last year, you will know that those jobs are not guaranteed. What is guaranteed is things that we make, things that we own, things that we put our resources, our talents, our brilliance in, that we keep and we pass down and we create real generational wealth. And I was like, I will never build something that I cannot own again. And I want to make sure that other innovators like me have a pathway to creating things that we own, that we keep, that we pass down generationally, because that is how we started, because we have no choice to but own things. And we ended up with things like Black Wall Street. We ended up with places in my hometown, Memphis, Tennessee, where Black wealth was built and then taken from us. And then we got our foot in the door, and then a lot of that went away with it. And I was like, nah, we have to own these things. And I started to really focus on this opportunity to create something that would create a pathway to ownership. And I didn't want to just give advice. I was like, no, I want to write a check. Like, I don't think that these owners, especially the Black founders that I encounter, like Sheena, they are brilliant. They don't need more mentorship. They need some checks. And I want to write those checks. I want to be on the other side of the table after, I raised millions of dollars at Black Girls Code. But I was like, no, I want to give that away and create pathways to creating ownership. And so this idea of creating this Black Innovation Lab really started to matriculate. I was really thinking about doing it in Oakland, California. That is where I live currently. I love the Bay Area. I love it deep. But something called me back home. And I was literally scrolling on Twitter, which I tend to do, and I found this posting by this sister, this researcher named Erica Buddington, and it was talking about this building. And the building was in Memphis, but she didn't know what the building was, and she did all this digging that day to find out it was this Black HBCU that had been abandoned in the 70s and gone through all this transition, and another sister, a Black woman, architect, was trying to save it. And I was like, that's where I need to be. And I literally stalked this sister down. I went to the LinkedIn, I was like, I know somebody know her, because we from Memphis, we know each other. I found her, and I was like, I got an idea for this space, and we started this path. And I think for me, this vision is really about not only going back home or taking a pivot. It's around taking all the things that I've learned, the good, the bad, the ugly, every bit of it, and taking it back to the place that I was made and to the people that made me, and bringing it back to the South that gets overlooked. I live in the Bay Area. I live in Silicon Valley, and I know that I'm usually the only one in these rooms. And I'm like, Black people in the South, that's where we got to build, because the talent, the brilliance, everything is there. And so my thesis is really about doing that, bringing this technology, this innovation, these resources and funding to founders that look like me, that live right here in the home of the South, so that the South can rise anew.
I love that. And I think, first of all, shout out to the Southern girls. We got Mississippi, Tennessee. I'm from Nashville, so we're well represented here. So thank you for all that you're doing. And one thing I also want to ask you, as a point of advice for folks who are just building boards, thinking about for the organizations that they're starting, what would you do differently, or what are you doing differently when it comes to board management and building, learning, now knowing what you know from your experience with Black Girls Code?
Yeah, I think it's important, especially those of us that come from, like, I'm an engineer by trade, so I was an engineer in corporate America for almost 20 years before I even started Black Girls Code. So, like, I learned all these things about being an entrepreneur on the fly, and I didn't know what I didn't know. And I think looking back, it is important to keep folks close to you who you can trust implicitly. And just because someone has a big name does not mean they're going to help you in any way. I'm trying to keep it real, and I'm trying to be politically correct.
You don't have to be politically correct. We're all family here.
You have to. So, like, I used to sort of like turn my nose up a little bit at the friends and family type of boards, but now I get it, because you want someone that's going to have your back in the clutch when things go bad, because oftentimes when things go bad, especially as a founder from a marginalized community, everybody points the finger at you. And you want somebody in your corner that's gonna be, that's gonna be ride or die. Let's just keep it like that. You need those type of folks. So you shouldn't have a large board. If you see flags or folks are not aligned with where you're trying to take the organization, those people don't need to be on your board. This next organization, Black Innovation Lab, did not want to make it a .org at first. I was like, never again. Oh, absolutely not. But as we started to really put together our thesis, we found that it probably should be a .org. The fund will be separate, but the organization, the accelerator, would be a .org. But I was like, no more than 3 people, and I'm one. So 2 other people on this board. And I think just this whole notion of board governance is important. Like, founding a board, whether you're a for-profit or a nonprofit, is the most important, one of the most important things that you will do. And so take it that seriously from the very beginning, and never let that thing get out of your control. Now, when we look at founders, like I was talking to someone about Zuckerberg like the other day, and it was like, yeah, like Mark does a lot of things I don't agree with, but he sure knows what he was doing when he controlled that board, when he put in those controls around how he maintains ownership of his board. He can't be voted out. That was smart, that was clutch. And I think when you're building, you need to have folks like that, and that you trust implicitly, especially as you start, money changing situations. So, I don't know, I'm rambling, but like, be careful with who you put on your board, be careful who you put in your inner circle, and keep your circle very, very tight.
Yes. Connor, speaking of money, you are investing in companies, and I imagine that part of that is looking at their board structures, their governance. Tell us how you're thinking about these things as you're looking at new companies. You're specifically focused on folks in the spirits industry, but talk to us about what you're focused on, what Pronghorn is doing specifically to support Black-led brands, and how you think about this whole conversation of board structures, governance, and all of that.
Yeah, great questions. Sorry, I lost my voice at the sundial last night, so I'm grateful for this microphone right here. But put that advice in a bottle, for sure. That is excellent advice, and really appreciate the opportunity to talk about it. Pronghorn is new on the scene, and it's in the spirits world, not so much in the tech world, so it's a quick elevator pitch for what we're about. We're on a mission to build a sustainable and replicatable model for how to diversify any industry. U.S. spirits is not unlike tech, in that while Black consumers are 12% of the consumption base, community only represents 8% of the workforce, 2% of the executives, and 1% of major acquisitions that we've been able to track so far. So we're on a 10-year mission to directly right-size those imbalances. And one of the first questions that we typically receive is, what is a pronghorn? So lock this away for your next bar trivia night. It is the second fastest land mammal in the world. It's the fastest in North America. But while it will lose in a sprint to a cheetah, it can maintain its high speed for miles and miles and miles. It is our namesake because we know successful DE&I is not a sprint that has a finish line of some kind of PR headline. This is a marathon. This is going to require not just great speed, but terrific endurance. And that's what we're about. We invest in Black-owned companies in the spirit space, but we are also building talent pipelines, working directly with HBCUs, with mid-level managers and executives to try and draw talent into the industry, create that representation, and create that ecosystem that's sustainable. So that's what we're trying to do on the Pronghorn side of things from an investment standpoint. I think it's, we invest from pre-seed to Series A, so oftentimes there's not a board of managers or board of directors in place. Sometimes there's not an operating agreement in place, so a lot of the work that we found in the beginning is the importance of education for founders and making sure that they are setting themselves up for success. I think far too often, it's very easy if you don't have the right guidance, if you have no mentors in the space, especially spirits is so heavily regulated. If you don't have the right board of advisors, you can find yourself giving away too much equity too soon or raising too much money too soon. And when you've built this amazing brand, you find yourself only holding 10 or 15% and the value is going to everybody else. So I think it's incredibly important to make sure at the very beginning of your journey, you are setting your goals. What are you trying to build? And who are the investors that can help you get there? Do you want smart money? Do you want active money? Do you want someone to write you a check and then never talk to them again? So those are the kind of questions you want to ask yourself and make sure you're talking to the right investors that meet that criteria. From a point of view of how can we most help these founders, I think the same barriers exist in any industry. It's access to capital, most certainly, but it's also access to network and know-how. And so behind our checks, we have a team of experts, all industry experts across their fields, that do custom bespoke consulting for all of our brands, create active partnerships, try and get them in front of the right places at the right time. So it's not just cash. Cash is incredibly important, often said as king, but I think it's part of an overall ecosystem. And we know, the tech industry is probably one of the, I don't know the full stats, but maybe the #1 receiver of VC dollars. In 2022, less than 1% went to Black founders. Our fund is going to be a drop in the bucket of that. But if we can create an ecosystem and educate founders so they are successful in follow-on funding and finding those right investors, we hope it can be a snowball effect that creates lasting change over the next 10 years and for the next 100 to come.
Awesome. So we're coming short on time. As we close, I want to hear from each of you. What is the one piece of advice that you would give folks who are thinking about pivoting, maybe into entrepreneurship, maybe they're already in entrepreneurship and they're thinking about pivoting their business? What would you share with them to take away today?
I guess I'll go first. Do it as soon as you know it needs to be done. I think as founders, we try to hold on to what we started with because it started as our baby. But when you see the market change or you see your business needs to change to fit where you're going, do it soon. And probably one of the hardest parts about pivoting is not your investors, because most of the time they're going to understand. They just want to make sure you make money and return their money. Probably one of the hardest things going to be is you're probably going to have to fire half of your team. So in our case, we started as B2C. We started pivoting to B2B. Most of the people that we hired from the beginning was there for B2C. They're not the same people for B2B. So probably one of the hardest pivots in a pivot is actually more than likely the people you started with on one side is now who you need to grow when you make that pivot, but do it fast.
I would say get comfortable with being uncomfortable. When you're going to make a pivot, there are going to be so many things that you do not know. I came from engineering, then went into nonprofit, now going into venture capital space, and next thing is going to do some stuff in AI. I did not know about those last two areas, had to learn it. And so to really make big gains, it is important for you to have a growth mindset and be willing to walk into the unknown. Now, don't do and not ask for advice. Like, you do need to find people that you trust to help you navigate those waters. But if it doesn't feel uncomfortable, if you're very comfortable in this next pathway, this detour, you're probably not shooting high enough. You got to shoot high enough, so you got to stretch yourself, because that's where the big wins will come.
Yeah, I mean, pivot is if you're not pivoting, you're not trying. You're never going to sit in a lab and create a business model and it's going to go exactly as planned. You're going to meet market realities and you're going to need to make changes. My only advice from an investor standpoint is it's really difficult to get the follow-on funding once you have your pivoting strategy if you haven't communicated with your investors along that journey. A lot of times, if you're, build a monthly routine where you're communicating to founders. I spoke to someone, or with your investors, excuse me, but I spoke with a founder recently who had a great mental model for how she did it. She raised $4 million. 8 months later, she wanted to take the company in a totally new direction. She went to her investors and said, look, here's the deal. Here's what we've learned over the last 8 months. Here's the data. Here's the stats. Here's the so what. This is what I'm going to do for the next 2 months. I'm going to come up with an action plan. I'm going to come back to you, and I'm going to share with you then. The investors were brought along on their journey. It wasn't some surprise for them, and they're in there as well. They should be partners. So don't view it as some scary conversation where you think you failed in your original business model. Get that advice, bring them along the journey, and make sure that communication is key, because that narrative and the optics of the investor continuing to support you is incredibly important.
All right, well, I've done my job. We are right on time. Thank you so much, Kimberley, Sheena, and Connor, and thank you all for listening.
Go support Black Innovation Lab. You gotta go GoFundMe.
Say it one more time.
I was like, we have a GoFundMe. Go support Black Innovation Lab. I got a pitch. Always be pitching would be my last advice.
Yes, hold on. I can take moderator privilege, 30 more seconds. Tell everyone how to support each of you and your initiatives.
For me, I just said it, we're raising for Black Innovation Lab. If you know collaborators, you want to support and donate yourself, share the campaign, blackinnovationlab.org. We appreciate it.
Ways to support us. A year ago, I would have said go get a Capway debit card, but that's not the case anymore. If you do have a Capway debit card, we are actually shutting our debit cards down at the end of this month. But ways to support us would be, I don't know, we're so B2B enterprise now.
Who are you trying to sell to?
So we sell everywhere to fintechs, telecommunications, schools, community organizations, municipalities. So anybody within that space, if you're looking for a finance partner, come talk to me.
Go to pronghorn.co. You can take a look at some of our portfolio companies. I'm proud to mention, I should have started with this, but we've made 18 investments in our first year. We saw brands who were at the Sundial last night, many Atlanta founders in native brands. So continue to look out for Black-owned brands in the spirit space. Continue to look out for opportunities in the industry. If you're ever interested in talking about it, we're here to help either way.
Awesome. Thank you.